Hello, this is Steve Malone with CompsFX. Hope you're doing well today and again some good trades. Over the last number of days, we've seen the market find itself in tight little ranges. And recently I've been asked if I would explain in detail how to trade a breakout of a range, or how do I go about trading a breakout of a range. Especially these narrow ranges, and you can see it here in the euro dollar on a 1 hour chart. We had a narrow range here, had another narrow range in this area. Now you'll notice though that the break of the range actually went in the direction opposite of what it ended up doing eventually. So you need to be aware on a breakout of a range that the market can make these little moves. Some folks call them head fakes. Other folks give them different names. So we get moves in the opposite direction of the actual intended direction. So I'm not going to cover that in this video. I'm just going to talk about how to go about trading a breakout of a range. So what I typically like to do is identify a range. So imagine, if you will, we couldn't see anything beyond this point right here going back. And I have this range right here. What I attempt to do is I attempt to put a level on the bottom of the range and a level on the top of the range. This kind of basically marks out what I'm looking for. And what I'm looking for is about 2 or 3 price points that fit for that level. So you can see I've got 3 lows right there, and then I have 3 highs up here. Now in order to follow the highs and the lows, I also look at the open and the closes, because what I'm going to be looking for on a smaller time frame is a close beyond the range. That's a key. Sometimes I'll look for 2 closes beyond the range that we just broke. So what we're going to do is go from this 1 hour time frame. I'm simply going to go down to a smaller time frame. Now you could go down to a half an hour, but I really don't think that's going to be truly what's going to help you in the hourly. I would rather go down to 15-minute, look for 1 to 2 clean breaks of that 15-minute chart, and here we are right here. This was the breakout. I just want to I want you to follow along with me. We already know what took place here, okay? So we'll use chart history to be our teacher and our guide. But this was the area that I talked about right here, okay, on March the 28th. Now what we're going to look for here is then a break of it. Now what I like to do is step up here and put on the bar chart so I can literally see the open and the close, because I'm going to be looking for the close beyond the range of that when it breaks out. And then I'm going to zoom in just a bit, okay? So I see the bottom of my range, I see the top of my range. Just about at that level, about average right there, okay? So what I'm going to be looking for is, as we make the break, I'm first going to look for a close. So this right here identifies a close. Okay, there are 2 options here. Once we get the close right there, we got to close beyond the range being the top of the range being 33.35. You can see the high here and the close being above that, the close being at 33.40. Now at this point what I'm going to be looking for is one of 2 things. On the next bar, a close above the range as well, or a break of the high. So in this case, right here's the high point right there. So I'm going to be looking for the market to break that high. That's going to be my entry point. Now where do we place the stop loss? The initial stop loss should be back inside the range, either back below here or at least below the midpoint of the range, or near the midpoint. What I prefer in this case is to give the market a little up and down, and possibly the best initial stop loss is underneath here. Then as it starts breaking and moving higher, then follow it with the price action channel. Put your stop along here. Okay? When it comes back inside the price action channel and closes, or comes back down in here, you can move your stop up there. And be aware, the market's only going to go so far. So in this case, where is our potential target? Higher. Well, I like to use the fibs and run the fibs in reverse. So I take this break and I'll run it down to the last low point. And this lays out certain levels. We have a 127.2. I'll move this over so you can see it just a little bit here. We have a 127.2, the 141.4, and the 1618. It's a simple little technique. Add the 127.2 and the 141.4 to your fib retracement tool. run the fib retracement tool from the entry point to the low, and these are going to be your targets. So you know where the market's going to potentially go to. You have a target in mind for it to reach when it breaks out. Okay? So that's a simple technique right there in doing a breakout. Okay? Now let's do it one more time here. Let's go to this little range we've had right here. Okay? We had a range, yeah, and we broke here. We have this range right here that we've had for the day, and that's about the average point right there. You get this high, this high, this high. Okay, now in this case, we got this low point right about in that area right there, the low point right there. Okay, so in this case, we know that the market went up and fell back down. So in this case, we again look for the close above, look for a second close, and an open. Now at this point, the market did not break this high point. There was a high point right up there, and the market did not break that high point. But we have two closes. So I'm going to look for the market to enter on the open after two closes above. Okay? Then from that point, I'm going to draw my fibs. We know the market didn't go all the way up there, but the market did reach up to the 127.2 and then fell right back down. Again, putting my initial stop loss below this level. Okay? Now, the market then, if you leave your lines in place, the market comes to the other side. Closes here. We put a level here for it to break our low. So it's about the low point right there. You can see it right there. So we have a close on the other side of our range. We don't have to wait for the second close because it actually broke here. And there's my entry point. Again, I'm going to draw my fibs in the opposite direction from the breaking point up to that last high point, and I'm going to look for the market to reach certain levels. And look what the market does. The market does come down, and if I draw it down here, the market reached the 127.2, the 141.4, bounced up to test the break here, then fell down, and I hit the 1618. Okay? So again, these are the techniques that I use to trade a break of a range, and you can keep your range in place because the market doesn't follow through on one side of the range. It's going to follow through on the other side of the range. Be prepared for that. Now let's take a look at another currency pair. So taking a look at the dollar Swiss, you can see that we're in a range right here in the dollar Swiss on an hourly chart. Here's my low point, and my average high point seems to be right about there. So we have a few hits on low, low, low. So there's a good low point right there, and here's a decent high point. So what I'm going to be looking for now is a break above 90.87 or a break below 90.68. So I'll go down to my 15-minute chart, move back to where we're at, okay, and then what I'm going to be looking for here is on the break. So here's what I'm going to look for. I'm going to look for the market to break above here, and if it breaks above there, I'm going to look to see where it closes at. Once it closes, then I'm going to look for a high point. So let's say we have a bar that breaks here, and here's the size of the bar, let's say, and he closes above. Then I'm going to be looking for the high to be my entry point if it breaks above that on the second bar. So let's say I have a second bar that does this number. I've got two closes. If it doesn't cross above here, I've got two closes above. If I've got two closes above, then I'm going to be entering in on the third bar. And I expect that third bar then to push above. At that point, what I'm going to be looking to do is take my entry point to my last low. You could take it from here or the other side of the range. I actually prefer the other side of the range, and that is going to give me my targets: 90.99, 91.02, and 91.07. That's what I'd be looking for on the top side based upon where this first candle breaks. So again, I'm not looking to enter the market on the first candle break. I'm looking for the first candle to move above and close, and for the next candle then to either break that high point, in this case for an entry, or the second close above and then entering in on the third candle to the upside. Same thing applies if the market's moving to the downside. Now notice again, I was on a 1 hour chart and I moved down to a 15-minute chart. If you trade on a 15-minute chart, move down to a 5-minute chart and look for the 2-bar close on the 5-minute chart, or look for a close and the break of either the high or the low, depending on which way the break of the range is, of that first bar that closed outside the range. Well, folks, this is Dean Malone with Compass FX. I hope some of this information about how I trade a break of the range will help you in forthcoming trades. Y'all have a great day, and we'll talk to you next time. Bye-bye.